Okay, Farah, if you don't mind, I will start now, and we'll get to, hopefully by the time we get to you, we will have had the camera.
Yes, we will take care of it.
Okay, hello and welcome everybody to today's webinar hosted by Hawkamah Institute of Corporate Governance here in Dubai, in collaboration with the American University of Beirut and of course in support of the Rami Makhzoumi Initiative for Corporate Governance. My name is Siba Audi, and I am the founder and storyteller at Saba Consultants, a boutique consultancy advising government and large corporates in the GCC on promoting transparency in communication and also content creation to empower the growth of the business. Over the next 45 minutes, we will explore the webinar title, which is How to Buffer and Lessen the Impact of COVID-19 to Ensure Business Sustainability. More than 70% of the world population is currently under lockdown, according to some of the numbers that we have seen recently. This lockdown is an attempt to contain the spread of the coronavirus pandemic. While it is aimed at preserving lives and reducing the pressure off of the healthcare systems around the globe, it also translates into many businesses coming to a complete halt, with the cost to global businesses estimated by the Asian Development Bank at in excess of $4 trillion, or what is about 5% of the global GDP. And with the predictions for global growth in 2020 being cut by more than half, now to almost 1%, the private sector in particular should be exploring measures to reduce the impact of the global crisis. So what can we do? What can we do to help answer this question? I'm very, very happy to have an esteemed panel of speakers with us here today. Allow me to introduce them very quickly by name. Ms. Farah Fusto, who is the CEO of Lazard Gulf, Dr. Salim Shaheen, Professor of Finance at the American University of Beirut, and Dr. Ashraf Gamal, CEO of Hawkamah Institute of Corporate Governance in Dubai. So we have at the moment about 76 attendees. So some housekeeping points will take us a long way. Please keep your videos off unless you are a panelist and unless you are asking a question. Panelists, if you wish to interject, give me a thumbs up or an icon that you can find on your screen, and I will try and get to you as quickly as I can. Everyone's mics are muted. You can unmute to ask a question during the Q&A session. This is a 45-minute webinar. We'll use the first 30 to discuss amongst the panelists, and then we'll open 15 minutes to questions from you, the audience. You may send any question that you like through the chat box. You can choose who you want to address your question to. It could be everybody. It could be one of the speakers or the organizers. We would definitely like this session to remain interactive, so please do come forward with those questions on the chat. Also, please be aware that we are recording this session, and hopefully within a day or so, the organizers will send the recording over to all the participants. The recording will also be posted on the website www.hawkamah.org. So to get us all started, Dr. Salim Shaheen, Professor of Finance at the American University of Beirut. Before we get into how to buffer the impact of the pandemic, let us try and understand the situation that we are all finding ourselves in. It's true that I'm a storyteller, but today I'm going to pass the storytelling over to Dr. Salim, who will tell us the story of this massive curveball that hit humanity, how it accelerated to threaten the health and also the economic continuity of a large portion of the global's inhabitants. Dr. Salim.
Thank you, Siba. Thank you for your introduction, and I'm sure you will be the best storyteller. But I had to do that role at the request of of the team. So thank you very much, and welcome. Good afternoon to all our attendees. So as Siba mentioned, I'm going to try to have a short, quick presentation that shows the macro and financial perspective of the impact of the coronavirus crisis. And then this would set the tone and help us maybe in developing further the discussion. So I'm going to start with this map that we've all seen and we lived it. And as you can see, and you may know that the COVID-19 started sometimes in late 2019, and the spread started in China, and it moved gradually in the neighboring countries, in Japan, Thailand, and very fast. This COVID-19 spread all over the world. As of today, this morning, we count in 210 countries more than 2 million confirmed cases of coronavirus COVID-19, and a death toll that exceeds 126,000 cases. Unfortunately, this crisis affected the financial market. The impact was felt very strongly in the stock markets. And I took the example of the Morgan Stanley Global Index. And you can see in this chart the significant drop of the financial market during the first weeks. In few weeks, we lost something like 35% of the stock market levels, prices, and then gradually with the increase in the number of affected cases, I'm sorry for the numbers, these are the numbers for yesterday for the confirmed cases. The government came in together with the central banks and started their stimulus programs in the second part of March, mostly 22nd and 23rd of March, and we started observing a market recovery, a very quick and strong market recovery. And today we're somewhere at -18, -19% compared to the high levels we had in February. And then, beside to this financial situation, the market reaction reflects a dramatic situation that we're going through in the real economy. And just taking some examples from an economic perspective, I took the statement or the example given by Guy Ryder, the Director General of ILO, who last week expected that during the coming quarter, we're going to lose something like 200 million jobs in our economies globally. And that adds to the 200 existing unemployed people. And for Guy Ryder, the impact is going to be general and will affect the entire economic sectors, but mostly the food and accommodation, retail, wholesale, business services, manufacturing, sectors that reflect 37.5% of our global employment. I just took the example of the United States, and as you can see it in the map and you're following the news, today we're losing more than 17 million jobs in the US. And for some observers, those pessimistic, we might end the year with something like 500 million unemployed people. This is a very serious situation from an employment perspective. And if we link it to the consumer sentiment, we have the same bad news. In the last few weeks, we moved from optimistic to pessimistic in the US, and I'm taking the example in the of the US because we have the data there. University of Michigan is having its consumer sentiment index, and the level at which we're today and the drop we went through is comparable to the drops we've lived during the major crisis of the last 40 years. So this is a very serious situation, but it's not only at the level of the household and the consumers. It's also at the level of businesses, and PwC released an update of its global survey of the businesses, the CFOs that they're dealing with, and the CFOs, 73% are very much concerned about the impact of COVID-19 on their business operations. 71% are concerned about a potential global recession and the impact of this recession on their financials. And obviously, companies react the same way. We're today in the age of cost containment, postponing investment, trying to do whatever it takes to sustain and survive with our businesses. So when looking at those variables in our economic systems, they are in perfect relationships with what we've done, what we've studied in economics, Econ 101. Everything lies on the household's behavior. And in this crisis, what we have is major disruptions that were driven by the household behavior. We started with this consumer spending. Consumer spending dropped significantly during the last weeks. We're all going through it. In the US only, during the month of March, we lost 57% of consumer spending. And this is very significant. The impact globally today is not only on the internal demand, it's also on the external demand. So we're having an impact on the local and international businesses. And this is impacting the international supply chains, the local supply chains. Businesses are failing, are facing difficulties. And their reaction is we're having labor layoffs, cutting salaries, and ultimately the system is moving into a vicious circle that is impacting the financials and leading to a financial problem. And to prevent a deterioration of the situation, obviously governments have to intervene. They had to intervene in whatever way to avoid a major disruption of the system. And we've seen it during the last weeks. Most of the political leaders went out, and some declared that they're going into a war against COVID-19 spread, and they're ready to do whatever it takes to tackle that pandemic. And as usual, we started seeing the central bank's reaction with their monetary policy. But again, this is a real economy shock, a crisis that affecting the consumers. So at the end, a monetary policy with dropping the interest rate, having a bond repurchase program or loan facilities to the private sector is not enough. We need more. We need a fiscal stimulus. The government have to intervene directly or indirectly to support the vulnerable household, the small, medium enterprises. And as usual, this means a significant increase in the indebtedness in the government debt. And just looking at that major risk that we used to talk about during the last decade as one of those big threats to our economy. At the end of 2019, global debt reached a record level of $255 trillion. That represented more than 3 times our global GDP. And this is very serious because you can understand the implications. Today, with the crisis we're going through, we expect with the increase in debt to reach something like 342% debt to GDP by the end of the year. But at the same time, we're not sure that our denominator would sustain at the levels that we're predicting. Today, IMF just yesterday issued a report expecting a 3% contraction in our GDP. But everything would depend on the duration of the confinement, those containment programs that we're going through, the size and the efficacy of the programs, the stimulus programs that are initiated by the government. So unfortunately, we might end the year with much more than that. And this reflects the threat we're going through. So it shows that we have to share the responsibility today. It's not only the governments who have to act. It's also the businesses that have to act, the consumers that have to act. We have to act. We have to protect ourselves. We have to follow best practices in containing this COVID-19 and then making sure that the economy start to work again to the best we can. It's a shared responsibility today in terms of governance of that problem, and the seriousness could really affect the economy in a very sad way. So that's in a fast way, in a quick way, the current situation with the COVID-19 crisis. So I'll leave it back to you, Siba. I hope that my story was fine and clear and allowed us to kind of understand what's happening today.
Thank you very much, Dr. Salim. Truly a very riveting story. It has us at the edge of our seats, all of us waiting for the next chapter to unfold in this new thriller that we are. Dr. Ashraf, I saw you nodding your head a while ago when Dr. Salim mentioned that we should all, as individuals, private sector, and also governments, share in the responsibility and governance of this situation. So how do you see it? How is this sitting with how is the situation sitting with regulators from a governance perspective?
Well, thank you so much, Seba, and thank you, Dr. Salim, for your presentation. It's a wonderful one. In fact, I mean, one of the key messages I think from Dr. Salim's presentation is it is the job of everyone. So it's not really one government can do it all. It's not going to be like this. Some people compare the current crisis to what happened in 2008. It is not comparable at all. I mean, this one is like, I think it's going to be like 10 times what we have seen before. It's going to be really a massive one. And the challenge is, in addition to Dr. Salim's number,
Can you qualify in what way?
Yeah, I mean, and for example, this is actually a moving target. Now, what happened in 2008 was some sort of, it's in the financial sector, which is affecting other sectors. What happened now is already the world was going towards a recession in last year, and now everything and everyone is hit by this crisis. So, and we have no idea how it's going to end. So still, it's a moving target. So when we started, after a couple of weeks, the IMF said it's going to be like $1 trillion reduction in GDP in the world. And then they moved it to 2 trillion. Now it's up to 5 trillion. So it's not even a set target. We have no idea the magnitude of the challenge. Back to your question about the response of the regulators, what has been going on globally speaking and in the region here is regulators have been very understanding, accommodating to what's happening. So they are changing regulations, making it easier for companies to do the governance stuff like reporting, AGMs, financial statements, and stuff like that. So they have been trying to cope and trying to work with companies. However, the key thing is this: if we go back to the basics of what is governance, which is the classical definitions that we use, which is a system by which companies are directed and controlled. In fact, what's happening right now will affect the two sides of it, the direction and the control. Now, governance starts with having your own vision and mission, and what are you trying to achieve in the coming few years. I think whatever you had up till January of this year is irrelevant to what's going on. So now companies have to go back to try to see whether these visions and missions are still workable or not. So this is really the first thing. Now, strategies also have objectives. So you need to think of what you're trying to achieve. So I guess now whatever you had in terms of goals for this year and the years to come are very different from what's really going to happen. Now you have then to go back and adjust your own KPIs. How are you going to assess your success or failure? If you stick to the traditional model of achieving certain financial targets and commercial objectives, that's gonna not happen. So you need to think about that. So what we are trying to say right now is simply that boards have to be very close to the management and work together to try to overcome what's happening. Now, one lesson we can learn from the crisis in 2008, while some of the global banks were collapsing, some of the Spanish banks have achieved profits out of that. And there was a study done by Nestor Advisors on that. And in it, one of the banks, what they had is they had weekly meetings for the board risk and audit committee with the management on a weekly basis to review what's happening and how can we respond properly. So it is time of really closeness between the boards and the management to try to think what's going on, how can we respond to that. Because now even your own business model has to change. How you achieve profits, how you achieve your targets now will be very different. So you need to think about this as well. And also the corporate culture is something which we have been calling boards to understand over time. You have to have the right culture in the company. Now the right culture will be something which is more for safety, security.
Can I ask everyone please to mute their mics except for Dr. Ashraf while he's speaking, please, because there is some background noise. Sorry.
So now companies and boards have to recheck their culture to see what is it that we should be focusing on right now. And honestly speaking, it's time for peoples. It's really what we have been calling companies to consider the CSR, the corporate social responsibility, which is, it's really all about people now. If you still focus on the shareholders and trying to achieve profits for them and try to deliver their value, now you really have to rethink. It's about safety, security, your own people, and your survival as well. But however, on the control environment, which is something I think it's extremely important that you have to focus on, there are a few things which you really need to pay attention to. The first thing is your own cash, your own money. Now, the longer this crisis will last, the more pressure on cash on companies will happen. We will see on a weekly basis companies going out insolvent and then bankrupt. If you don't pay attention to how to manage your own financials, it's going to be a disaster. So that's something which you have to pay attention to. Now, the whole concept of virtualization and going online. So now we have seen some regulators and even some organizations issuing guidelines for how to conduct virtual meetings. We have launched a report yesterday that was translated from ICSA in the UK about how to conduct virtual meetings. It's not that you have a computer is going to be successful. How to do that? It's something which you have to pay attention to. It's again safety and security of your own staff. That's something which has to be top. again, the key challenge is, as I was saying, it's really a moving target. So things are not clear at the moment. Every week you have some new development happening. So you have some economies are trying to open up right now to start again working, taking the risk of saying whatever will happen, but then other countries are more conservative. The point is, with globalization, the entire world is in fact one entity. So if you have a country which is now safe and free from the virus, but then other countries around it are not, it's not going to make a difference. So what I'm trying to say is it's a time for totally new thinking about governance and how governance will work at the end of the day. Thank you, Siba. Back to you.
Thank you, Dr. Ashraf. I would definitely like to bring Farah in on this. I think you raised a lot of good points here that I know Farah feels strongly about. Farah, how is all this sitting in the private sector, and how is leadership dealing with it? Dr. Ashraf talked about revisiting your vision and mission and revisiting your KPIs. He said it's all about the people. So if for the survival of companies, for once, we're now looking at the people aspect versus the financial aspect. The two, of course, are important, but as a leader, how do you balance the two now in the environment we're in?
Thank you, Seba. Good morning, good afternoon to many of you. Sorry, I can't be here visually, but I'll just take it as a panel. So I think it's very important what Dr. Ashraf said. I mean, I think it's definitely now a focus on the community versus the corporation. We're all focused on our people. Without the safety and security of our people, we cannot function as organizations. But let me also touch on something that you mentioned, Dr. Ashraf, and you both mentioned actually, Dr. Shaheen, about the difference between the global financial crisis. There are some very, very substantial differences to the last crisis. One being that this is a public health crisis. So there are many other stakeholders that are involved for solutions here. We need fiscal, we need monetary, we need health reform. The last financial crisis, the banking system was actually one of the sources of the crisis. Now the banking system is actually a lot stronger and probably one of the strongest sectors. And that was due to regulatory changes that occurred after the last global financial crisis regarding liquidity for the banking system. And so actually now the banking system could be used or thought of as a source of the solution for the global financial crisis. So much of the stimulus that will come through the governments will come through the banking system. And the other thing that is very different is the fact that this is a totally uncoordinated policy response by leaders around the world. And during the global financial crisis, there was the formation of the G20, there was synchronized coordination globally in the financial sector and central banks. You now have a situation where you have no leadership, a void of leadership globally, and you have no coordination between leaders around the world. And what that has caused is disruption in supply chains and intermittent disruption in supply chains, which will potentially make this crisis last a lot longer. So we have now China that has come back on stream, which we all know, we've heard is around 20% back on stream, but the demand is not there. And so 80% of restaurants are reopened in China, but the demand for public services are still down 50% from before COVID, the crisis. You have, we monitor things like subway usage, which is down 40% year on year. We monitor things like traffic in China, which is down 10%. So people are not going back to work. So, going back to your questions as how do we as leaders take this forward? The first thing is, as you've mentioned, Dr. Ashraf, is our people. So working from home has now become a reality. And where in the past it was untested as a coordinated effort as an organization, it's now been made very clear that we can function as a global financial services company. So as I think financial services is probably one of the sectors that is in a better situation where we can function totally from home, thanks to Zoom, WebEx, and many of the technology companies, which maybe 10 years ago we wouldn't have been able to operate as effectively as we are doing now. And so we are monitoring a couple of things, which we think is very important for us to even consider going back to the workforce. One is the testing, how much progress is being made on testing, how much progress is being made in antiviral drugs and potential vaccine. Until we see progress in this area, we don't feel it would be potentially safe to have our staff taking public transport, mixing in crowds, and going back to the office. So that's one thing that's very important for us, and that's something that we continue to monitor. Seba?
Farah, aside from the human side, let's go a little bit to the financial side. You mentioned that the banking financial services sector is probably one of the stronger sectors going into or coming out of this COVID-19 pandemic. We also are hearing a lot of all the governments around the world are coming out with stimulus packages, etc. All that is going to mean an increased level of in money, printing money or debt globally. So for how long, how much longer can this system sustain?
I don't have a crystal ball, but you're right. I mean, the debt situation is going to become very difficult. So, you know, if you look at debt to GDP in many of the European countries, Italy is probably going to exceed 150% by the end of 2020. France and Spain are going to be probably close to 100%. Netherlands and Germany are going to be closer to 80%. But then, so you're going to have a real disparity between different countries in Europe alone. And the countries that are actually increasing their debt at higher levels, which is the Southern European countries, are also going to be hit the most by tourism and retail. So you're going to start having a real differentiated economic challenges for different countries. So we all talk about global numbers, but I think this is a time when actually we can't talk about global numbers. We have to talk about each country independently, because every country will have its own challenges. And therefore, as a global organization that operates in countries around the world, you know, we have to monitor every single country, government responses in every country, the healthcare in every country. We're now talking about, people are talking about potentially beginning of May to starting to open up communities. You know, clearly, you know, your question is around how long can we survive? The larger you are, the more cash management you have been able to preserve and manage your cash effectively, your working capital, the longer you can survive. You have the large tech companies who are cash rich, who potentially can survive longer. But then this is a question also to Dr. Ashraf and Dr. Shaheen on regulation. You know, will regulation step in and start imposing new regulation on the corporate sector, on the savings of individuals? Can we allow companies to continue borrowing money and buying back shares and paying out dividends, but actually not investing in their operating businesses?
It's interesting that this tiny little parasite that has arrived at all our doorsteps is reversing this massive globalization drive that we have been looking at and treating the world as one big community, whereas now we have to again start looking at our own little boxes, as it were. Dr. Salim, go ahead.
Yeah, thank you very much. I agree with Farah, with Dr. Ashraf, and I fully agree today. It's a completely uncoordinated response. But let's not forget that for the time being, we are in the middle of the crisis. And this is not the first crisis, see, right? And so what we're trying to do is to react to that. And the best we can do is to start to developing a good understanding, collecting the data, to understand the situation that we're dealing with today. And we're hearing that today. I mean, it's today, the medical doctors, it's the public health sector that is leading us in terms of understanding, collecting the data, and then understanding where we're heading. But if we look at it as a crisis, and we've all seen crises and we lived them, there are key things that we have to go through at this stage. And I'm going to talk about it from a corporate perspective as a board member involved in the financial sector. You see, what we try to do in a crisis situation is try to have a clear communication strategy, something where you build transparency and you try to gain the trust of your stakeholders. But at the same time, we need to deal with the nature of the crisis. And here, it's a public health crisis. So what we try to do is we try to protect the health of our stakeholders. And here we talk about our employees, the workforce, we talk about our customers, and we try to prepare for the next step. So my reading is that governments are trying to do the same thing. And if we look at it from a corporate perspective, yes, today corporations are trying to develop policies and procedures. They're definitely not all at the same level, and there are surveys and studies. McKinsey, I think, issued something about it a few days ago, showing that companies are still late in moving into that direction. Some are still not having that, but for many companies today, we're having that. So in the banking industry, for example, we see that the banks globally, when they're open, they're trying to alternate, so not having all their employees present at the same time. They're trying to use the internet banking, the online banking, the mobile phones. They're trying to create that distance, separation between the customers and the employees. We're trying to regulate to the best we can those behavior. I'm involved in a bank in Turkey, and the regulator jumped in and intervened. And in Turkey, for example, those who are older than 65 or younger than 20 should not or are not supposed to come to banks. So banks have to adapt and make sure that they're using the technology to ensure the safety of their stakeholders. And these are actions that we're dealing with today. So protecting people is key today. And my guess, my reading is that governments are still going through that exercise. And why we're not having clear plans from government's perspective, from regulators, mostly because we're not able to cope with the current uncertainty. When we went through the 2008 crisis, it was a financial crisis. So you develop your plans, you do the bond repurchase, you support banks, you bail out, and then you move on and you create again your system. Today, it's full of uncertainty. We're still in wave one. And as you know, Spanish flu in the last century, the SARS, we always had to go into a second wave. And my guess is that today we're testing the way to open our economies and trying to mitigate a potential wave 2 that could come back and haunt us and affect our economies. So planning is not a perfect exercise. So even in our communication strategies, we're not able to be that transparent and that clear with the stakeholders.
Some would argue it might be a little bit too soon. I know time is not on anyone's side, but it may be too soon to have that full plan that is going to help you push forward. Could I just, before I give the mic over back to Dr. Ashraf, just two things, please. Dr. Salim, if you would like to stop sharing your screen, unless you still need that. Thank you very much. If anybody has any question from the participants, please let us know so that we can put that to our panelists. There's one question that I'm going on the chat that I'm going to pose now, but I'd like to give Dr. Ashraf the opportunity to respond to what we just heard. What is it that the regulators can do in this crisis? We've seen the role of the regulators in the financial industry, financial services industry, I beg your pardon, a few years back. What can regulators do in this instance now?
Yeah, I think one of the key issues which is happening right now is you are trying to balance between the concept of the free economy and decision making given to the shareholders and the owners of the organizations and the board of these companies, and of course the public interest, because as Dr. Salim is saying, this is actually a public health problem that we are facing right now. It's a crisis. It's not about profits, it's about people. So regulators are some sort of interfering and trying to think of measures that they can protect industries. However, also organizations have to go back to look inside of them to see what they can also do. I agree with Farah. It's not actually only moving from the world as the world going to countries to see the specific cases in the country, but actually going to companies and to industries. Now, every industry is hit by what's happening, which is again one of the major difference between this one and the 2008 one. 2008 one was the financial one affecting some of the investors. This one is every industry one. It's hitting everybody. In 2008, you had the option of going back to work full power so that you can try to make up for the losses. This one you cannot even work. Some of the factories are closed. So even the tools that we had in 2008, we don't have them right now. So regulators are trying to interfere. They are trying to do their part. But I think there is so little that they can do to save industries and save companies end of the day. I think now it's going to be also responsibility of every company with its own board of directors and management to think of how can we survive that. Now, one of the key elements which will come out in this crisis, which already came out in the country level as well as company level, is ethics and ethical standards. Now, many decisions which you have to do right now will actually, test your ethical standards, how ethical you are in whatever that you are doing. Because in some cases, you might have to make some painful decisions to you financially speaking, but that's the ethical and the right thing to do. So again, and it's also at the government level, by the way, because even governments now have to make tough decisions. Now, governments in the Middle East, which already had some sort of financial problems, now they are trying to, how can we save our people? How can we invest? Now, so the two choices is you have debts to pay, you have projects which are still in progress, which you have to continue building, but then you have people who might be dying if you are not spending on healthcare, for example. So ethics will come here. So again, I'm trying to say this again. Regulators have so limited things that they can do in the current crisis, and I do agree with Dr. Salim and Farah. It's an ongoing crisis. We're still in phase one. We have no idea how long this will last, and who is going to be hit next. Again, my own feeling is every week this crisis will continue. You have bankruptcies happening. You have companies dropping out of business. You have more unemployment. That's in every country in the globe. Yes, there are some companies and industries which benefit from that, but this is actually very limited and small in terms of the magnitude and the size as compared to the economies. And that's why the numbers are overall negative. It's very challenging time. Regulators can do something, companies can do something, governments can do something, but end of the day, we have to try to survive in this time.
Absolutely. 45 minutes goes very quickly. I'm conscious of the time and I don't want to hold up 92 people on this call. We have 5 minutes, so I'm just going to take a couple of questions off of the chat. Farah, this is for you perhaps. Fiona Jordan is asking, can you please be specific about what companies expect from government?
What companies should expect from governments? Is that the question?
What would companies want from government? What can government do for companies?
Well, I think we've seen all over the world governments announcing fiscal and monetary stimulus at very different levels for SMEs, for different companies in the United States. Last week, they also reduced the threshold for companies that were not eligible before for aid. In the Middle East, I think you probably have less transparency than in other markets. There are all different. At this point in time, companies can only control the cost base. There are no revenues for many companies, and so the only thing you can do is address every element of your cost base. The first is the largest usually is your employees. Second could be your rent. So whether you're asking for aid or deferral of rent, whether it's depending on how much leverage you have in your company, there's servicing of debt. So that's a conversation with the banking sector. And I think it's every part of the supply chain is affected. So it's basically sitting down and addressing every element of your cost base and seeing who your stakeholders are to enter into dialogue with your stakeholders.
Absolutely. Another question is specific to Lebanon, a country with a large number of SMEs. In addition to COVID-19, of course, the economy is trying to cope with a potential devaluation and a total economic meltdown. What is the advice? What can companies prioritize and what areas to concentrate on to maintain business sustainability? Perhaps, Farah, if you have a couple of words, and then we'll go to Dr. Salim on that as well, please.
I think Dr. Shaheen is the expert on Lebanon, so I'm going to leave it to him.
Thank you, Farah. I'm not sure we have any expert today in this country. We're struggling with the situation. Let me just try to take the example of Lebanon for the COVID-19. The Levant region is a hotspot today for the COVID-19 because so far the numbers are well contained. We're managing extremely well, but needless to say that we have our Syrian refugee camps that are at extremely high risk. And so far, we're simply afraid that this coronavirus moves into those camps, because we have more than 5.5 million displaced Syrians in our Levant region, be it in Lebanon or in Jordan, in other countries of the region. And that could be a major carnage, and the word I think was used by WHO or Norwegian refugee organization. This could be a very serious matter to deal with, and Lebanon is at risk on that front. And this is why we need really to share that responsibility and make sure that we're containing it, because it's going to be a humanitarian crisis if this is to happen. Now, at the same time, as mentioned, Lebanon is facing two crises in one. So we have the economic, financial, and social crisis, and we have now this medical crisis. And then if we look at it from an economic perspective, simply the example of devaluation, with that lack of US dollar in our economy, we're struggling to get the medical supplies properly. We're struggling to sustain our economy. And this is also putting pressure on all the other activities that are extremely needed. And the retail industry, the retail sector is one of them. Today we are in dire need for dollars, because otherwise in the coming couple of months we can move into a new crisis, which is lack of the basic food, given that we are a major importing country. 80% of our goods are being imported. So yes, the situation in Lebanon requires a lot of support, a lot of consistency in moving forward. We have a government that is trying to come out with a plan. We hope that they can come out with something that is relevant and then feasible, because the country in the coming months will need fresh dollars and will need a solution to move out from the economic crisis. So hopefully that we can contain the medical one at the same time. There is no perfect answer at this stage. From the corporate perspective in Lebanon, we need more and more support. What we're getting so far is meager compared to what is given elsewhere. I mean, if you go to the US, again, I'm going to talk about the US example, or you go to Europe, we're having more than $15 trillion commitment from governments, from central banks to support their economies. Unfortunately, with our economic crisis, we're not able to do much. The corporate sector, not only in Lebanon, even internationally, is not in need for loans at advantageous interest rate. If you look at the airline industry in the US, yesterday, I think the major airline companies got billions of dollars of loan, partly at the current market rate, and others at 0% or something that is subsidized. What we are in need for in the corporate sector is a waiver of those loans. Why? Because, you know, at the end of the day, corporations are saying, if you give us loans, we're going to accumulate more and more loans, and in the future we're going to have more and more interest to pay, the principal to repay, and then this is going to add to our fixed cost, and we will not be able to survive. So the crisis is very serious, even in the corporate sector, be it in Lebanon or outside. And what we need from our government is really a good mitigation of that balance. It's health versus wealth, and we all understand that it's a very difficult balance and trade-off to deal with.
Yeah, I think that you just answered one of the questions on the chat. Nicola Arbeis was saying that the entire monetary system will have to be revisited. Otherwise, you know, a lot of debt needs to be written off. Otherwise, we're going to end up with global poverty, or rather poverty on a global scale. Dr. Ashraf, we will finish with addressing something, one of the questions to you, perhaps. In essence, the question is, what needs to be changed as regards governance going forward?
I think somebody said a couple of days back, it will never be business as usual again after the crisis, and it will never be governance as usual again after the crisis. So the whole concept of risk will be very different, because again, even when you see that, you know, 2014 Obama speech, we never really thought of this as something serious, saying that if in a few years' time we have an epidemic, we're not actually ready to face that. And even I think Bill Gates had something a few years back on the same concept. So now the concept of risk will be very different. The concept of board engagement will be very different. But what I want to say, Siba, is because again, it was, I think, one of the questions maybe by Fiana, which is actually on the role of the international community. What do you expect? This is, yes, we look at every country, what's happening there, but it's also time for solidarity. It's really time for us to think of the world as one entity. It's time for everyone is supporting everyone else. Now, in the US system, when they have the system by which the president can actually direct production in certain factories to produce things which are useful for facing certain crises, I think it's time to think of the world as a big factory, and we have to think of what is needed from which countries. Now, some countries are less affected so far in terms of production, by the crisis. So actually, these countries can be of support to other countries. Yesterday, I think it was the UK Minister of Foreign Affairs thanking some of the countries which have agreed to produce medical supplies and medical things for the British. And these countries are actually developing emerging markets. And even some of the British people said, these are, emerging markets. How can they support us? No, everyone can support everyone now. So it's really time to think out of the box of what can everyone do for the others, not just for myself, how to solve my own problems.
Yeah, absolutely. Question from Yasser is asking, keeps moving. What are your expectations for the new normals or the new norms, and what are the key players? Who are they that are going to define the rules of these new norms, Farah?
So I think let's remember that this is an economic crisis that is due to the shutdown policies of government. And there's things that we haven't touched on, which I'm not going to touch on now, which includes the shrinkage in demand in oil from 20 to 30 million barrels per day, which is going to have huge impact on some sectors. So leaders today have to work on scenarios to restart the economy, but they have to also try to preserve the fabric of society. So, to answer that question, there are some sectors that are very badly affected, like travel, the airline industry, everything related to travel, hotels. But things that could potentially do and are doing very well are things like e-commerce. If you look at Zoom used to have 10 million work calls a day, and today pre-crisis, and now they're having over 200 million. So there are clearly some sectors that have done very well. You have other sectors that rely on crowds that will have to question how they will function in the future. So who's going to rush back and go to the cinema? What will disrupt cinemas? Who's going to rush back and go to concerts, to sports events, until we know there is safety and there's either a vaccine or an antiviral drug? So I think the whole concept of working from home will become a new norm, which will have an impact on commercial real estate. We as organizations will now accept the fact that people can work from home. And so what does that mean? There are sectors that will service the ability of you working from home, whether it's redesigning the workplace at home, electronically, mobility, the actual space. So everything related to mobility and distance, I think will do well.
I would like to add something on that front. Two things. One from a macro perspective and one from a micro perspective. Something that we have to be careful to and then really follow. Things will change and our beliefs and habits will change, but there are things that we were observing during the last years that would continue and maybe at a stronger pace. This feeling of nationalism, this trend of protectionism, is likely to increase also post-crisis. The political leaders might benefit, leverage the current feelings to push a bit further that rhetoric of nationalism. And accordingly, we're going to see a bit more of local production. And these are things that we will see. The taxation, the fiscal policies will try to support local production rather than this globalization trend. And this is important to keep in mind. But now let me just talk about the positive news. In every crisis, we have also the positives of trying to find solutions to mitigate the crisis we're going through. And this is where you have the biggest innovative ideas. If you look at the pre-coronavirus crisis, in February and January, 50% of the current unicorns that we have today in our economy were created during the 2008-2009 crisis. Airbnb was created back then. The founders were not able to pay the rent of their place, so they came out with the idea of Airbnb. And those unicorns today are valued something around $150 billion. So it's in this period that we're going to find those innovative ideas to support the growth. And venture capitalists in the US, when you read when you talk to them, they're all talking about investing in the healthcare, in the remote work solutions, logistics, and software programs. These are things that are going to develop our future.
Absolutely, Dr. Salim, I could not agree with you more on the opportunity that is available, that arises from situations like this. We just need to, I think, reset. And on the subject of reset, Ziad Nassar posted on the chat that it is an economic reset. Governments will, and I'm reading here, will give or loan or grant their friends, between parentheses, big companies, the money to buy out the smaller players for pennies on the dollar. Let's hope that governments will wake up to the needs of the smaller players, realizing that they are the engines of the economy, and help them sustain as opposed to disappear. And there was also a question from Dr. Waddah Ghanem, and this will be the last question before we are cut off. If there is time, what kind of key changes to corporate governance standards are expected post-COVID-19 now that risk profiles for business, now that the risk profiles for businesses are changing?
Yeah, I think I touched slightly upon this. I mean, the whole concept of risk will be different. The whole concept of agility will be different. Now, corporates used to think of a strategy like for 5 years and 10 years to come. I think after the crisis, this is never going to happen. We will be affected for quite some time. So I do believe that governance structures have to be a little bit short-term oriented rather than like thinking of the 5 years and stuff like that. And who sits on your board as well? I mean, we have seen lots of boards where we know that nobody on the board can really be qualified enough to handle what's going on. So the concept of having somebody on the board to understand financials very well, to read the economies very well, to read what's happening globally very well, that's really quite essential. So I think in areas of board composition, this has to be different. In the areas of agility and flexibility, this has to be different. And of course, in the area of KPIs, what are the measures to assess whether we are successful or not, that's going to be different. And the risk will take a whole different meaning, even from now during this crisis. And of course, after the crisis is over, hopefully soon, because as I said, the longer it will go, the more disasters we will have.
Absolutely.
As a board member, I have to add that something will add up to the job of the risk committee from now on. And Farah mentioned that at the beginning. We will have to make sure that our companies have enough cash to cover part of our operating cycle in case there are no revenues the way we're going through today.
Yeah.
And also diversity of suppliers, very important, Dr. Salim. So diversity of supply chain, that's very important, not relying on a region for sourcing, because I mean, this time it's global, next time it could be like the SARS where it was contained somewhere. So you have to run this risk as well.
Thank you so much, my dear panelists, and thanks to everyone for attending today. I really look forward to reading that white paper once it comes out. I don't think you mentioned the white paper, but I'm kind of throwing you there an idea on perhaps way forward and what things to expect in the next couple of months. People are looking for guidance, and I think with the talent that we have on the panel here, something can be put together quite easily and of benefit to everyone. Thank you very much, Dr. Ashraf Gabal, Dr. Salim Shaheen, and Ms. Farah Fusto. Shukran. Thank you all for coming today, and I hope this was useful for everybody. Stay safe, stay at home, and see you soon.
Thank you.
Thank you, Seba. Thank you.
Thank you. Thank you, Seba. Thank you.
Thank you, everyone.
Thank you, everyone.
Thank you, EFC Academy. Thank you, everyone.
Thank you.
Thank you very much.
Stay safe.
Thank you very much.
Thank you.